Latest on Canadian and U.S. inflation, and we saw some actually great numbers out of Canada recently. Recent numbers that came out a few days ago tell us that Canadian inflation is falling, and it continues to fall. We were actually expecting inflation to rise here in our country, in Canada, from 2.9 to 3.1%. It actually declined to 2.8%. We saw a pretty big drop in core inflation in Canada. It actually dropped to 2.8% from well above 3% as well. So we're definitely moving in the right direction. In the US, unfortunately, they didn't have as good a numbers. We saw core inflation drop from 3.9 to 3.8, but we saw the headline inflation number move higher, unfortunately, and it went up to just over 3.1%. I think it was around 3.2, if I'm not mistaken. And obviously going in the wrong direction. A lot of people were hoping to see a 2.9 rate, and we ended up getting that 3.2% rate. And on the day inflation came out in the US, stock market unfortunately went down, and there was a bit of a sell-off. So overall, what does this mean for individual investors? Well, in my opinion, I think Canadian Bank of Canada is a lot closer to lowering interest rates than perhaps they are in the US. What does that mean for our dollar? Well, that could mean a bit of a weakening dollar as compared to the US dollar if the Bank of Canada does cut rates before the United States. In the US, GDP is running still above 2%. In Canada, GDP or growth rates are running maybe 1%. So the growth rate has come down, inflation rate has come down. And so I think to stimulate, Bank of Canada may cut rates or may have to cut rates a lot sooner than they will in the US. We have another few charts here. Canada's headline inflation eases to an 8-month low. And you can see this chart here. And look at the gap between the bank rate, Bank of Canada rate at 5%, and the inflation rate at 2.8%. That is one of the biggest gaps I've ever seen. And that just tells all of us that the Bank of Canada has room to cut when they decide to. Question is, when will they decide to cut rates? Many people are now hoping or predicting that we could see a cut maybe in the June time horizon. Some people are hoping for an April cut, but we'll have to see. We have another chart here on inflation and Fed funds rate in the United States, of course. This is actually core inflation, not the headline number. As you can see, the core inflation is just below 4%. And when you look at where the Fed funds rate is, you're looking at about a 5.25. So again, there's a big gap there. Not as large of a gap is in Canada, but there is a gap in the Fed funds rate and the core CPI rate. So I think the Fed as well has the opportunity and the room to start cutting rates when they see fit. The problem is in the United States, we're starting to see higher or hotter inflationary data. Over the past few months, January and February, the inflation numbers that came in were above what we were expecting. And so that may delay the Fed from cutting rates. And it also may cause the Fed to maybe only cut rates twice versus 3 times, or maybe none at all. I've heard some people say that the Fed may not cut rates this year at all. I don't think the market has priced that in yet. And so if we do get some information or receive some information today at 2 p.m. or any time after that, that the Fed is not going to cut as much as the market anticipated, we could see a bit of a sell-off in the market. On the Canadian side, when we do get that first rate cut, which possibly could be before they cut rates in the US, that will affect more so our dollar. It may weaken our dollar. Interest rates will come down. It will be a good time or a good event for all debt holders, those looking to, get a new mortgage or extend their mortgage or their mortgage is up for renewal. If we were to cut rates or the Bank of Canada were to cut rates, that would be a positive for them. So keep an eye on what the Bank of Canada is going to say going forward. Keep an eye or keep a listen for hints today at 2 p.m. from the Federal Reserve, what they say regarding interest rate cuts in the future, whether it's 2, whether it's still 3. because I think that will be very important for how the market behaves today and also going forward.